And I talk about being glocal, right? You got to be global but local.
Welcome. I'm Maneet Ahuja, editor-at-large at Forbes and founder of Iconoclast. And we're here at the Case Summit. I'm thrilled to be joined now by Shane Clifford, Managing Director and Head of Global Wealth Management at Carlyle, one of the world's largest investment firms with $465 billion in assets under management. Shane, thank you so much for joining us.
Thanks for having me. I'm excited for the conversation today.
So tell us about Carlyle's role within the wealth management industry and why Case is such an important place for you guys to be represented right now.
Sure. So when you think about Carlyle, I think some folks always think about us in the institutional kind of world with the whole, those LPs, global LPs, where it be sovereign wealth funds, U.S. state pension funds. It's been a big part of the growth of the firm since it was founded back in 1987. What probably isn't as well known is that we've been in the wealth space since the early 2000s. We've raised over $60 billion over those years, predominantly in closed-end vehicles, and we can dig in a little bit about what that means down the road. And more recently, we've been really focused on the evolution of Carlyle in the wealth space. I think what's incredibly important for me is the brand. The Carlyle brand is incredibly powerful from a global footprint in all things wealth. So I definitely benefit and the team benefits from that.
So you've spoken a lot about how Carlyle is adapting its private market offerings to meet the distinct needs of RIAs. Can you go into that a little bit and some of the offerings that Carlyle focuses on?
Sure. So I think, I spend a lot of time traveling globally. And I think you got to get out of that ivory tower. And at times in this industry, you'll get really, really smart investment folks that will have a great idea, but there may not be any actual end client demand for that in the industry, right? So we spend a lot of time at Carlyle today trying to understand what is it that an advisor is trying to solve in a client's portfolio. And then in-house, what investment capabilities do we have that we can bring to those end clients? And partners like Case are important in that conversation because they've really got a pulse of the market here, in particular on the RIA side. They're very, very strong in the IBD channel as well. So I really benefit from them in terms of being able to get some direct market feedback as well from the Case folks. So it is a collective that gets us there in the end, but I would say I'm vehicle agnostic. So whether one accesses us through a closed-end vehicle or through an evergreen structure, what has to be at the core of the conversation is what's best for the client, and can we bring our institutional investment excellence to that end wealth client. So we touched on RIAs, but you guys also cater to family offices, wirehouse advisors. Each of these investment segments have different goals, timelines, client profiles. How's your firm customizing engagement to cater to the end user? Yeah, I think it starts with C-suite engagement and an understanding at the C-suite around how each of these different types of LPs behaves and what it is that they're trying to solve for. So under the leadership of Harvey Schwartz, I think what we really do have is a sense for the market today and what each of these channels is looking for. So when I think about, for example, the family office space, those are folks that are looking for more one-off, bespoke mandates to work with us on, versus if we're working in something, let's say the mass affluent, right, where we're really going down to that accredited investor level, then that's something where we're trying to create a fund that's scalable, but that's very accessible, in particular from an operational perspective. So it's probably got to have a ticker involved in it. So there's different vehicles that you need for different channels. And I think it's kind of understanding the pros and cons of each of those things. We're always going to be really super deliberate in how we approach each of those channels, which we can dig into if you want a little bit further as well.
Yeah, no, we definitely will. I want to also touch on Carlyle is navigating this moment of great transformation as the private markets become more accessible and we're dramatically seeing the public markets shrink. Talk to us about this macro backdrop that you're seeing and this sea change that is happening that's creating this great opportunity for investors.
Yeah, look, I think the convergence has already happened. When I'm out there, I think we need to play catch up with the end market. When I talk to end clients, they understand what has happened to, over the last 20 years when you see how many public companies have delisted, when you see the rise of private enterprise and what that means. So I think actually we need to give more credit to individual investors who they understand that diversification is everything. So if you believe in diversification, you believe in giving clients access to private markets, because true diversification today implies access to public and to private. And I think that now is table stakes. I think we all get that, we understand that. I think as an industry, what we really need to, what gets bandied about a lot in this business is the democratization of alts, right? It's kind of this kind of
this like in vogue slogan that we've been talking about extensively. Yeah.
And it's not, I would say what it should be is the responsible democratization of alts for the wealth channel. And I think responsible is really important here, because ultimately a big component of this is going to be education. And it's going to be a journey for everyone on that side. And I kind of think about education as really being the cornerstone of how Carlyle is approaching this market. But it's complicated, it's evolving.
What do you mean by that? Talk to me a little bit about education being the cornerstone. What are you guys implementing or putting out there in terms of, is it industry white papers or research? How are you engaging with clients in this moment where it just seems like there's continuous uncertainty in global geopolitical, issues at play?
Yeah, I think, look, I always say this about Carlyle. We don't have a content problem. We produce just, best-in-class content. Now, I think for an institutional LP, I would say that we're really in the storytelling business, right? And for an institutional LP, you typically get, 30 minutes to sit in front of a board. And with that board, you've got the investment consultant, you've got staff, and you have the board of trustees. And you're going to have 30 minutes to go through a pretty thorough deck. And let's call it 80, no, you're not going to go through all, God forbid, all 80, 90 pages would be brutal for anyone.
Right.
But you have the opportunity to talk to the end decision makers. The wealth channel is an intermediary channel. And I think sometimes people... They miss that piece of the puzzle, because at the end of the day, we have, and I'm generalizing a little bit, but typically, we've got about 5 minutes to explain the thesis to the intermediary, that financial advisor, that private banker. That individual then is going to have probably 3 minutes to explain it to the end client. And I always think about my own parents, I think about my in-laws, and I think about my father-in-law who's a dentist down in Florida, right? And I always think about how does he want to get that information?
Right.
So we've got to take this institutional quality content, and now we've got to deliver it in a very different format. So I've got to take a 10-page white paper that's got fantastic information in it,
but distill it for a broader audience.
And I think video content as well is one that you got to be up to speed on that.
So is that something that you guys are leaning in on, is just more engagement with the media, but more of your own content generation as well?
Yeah, I think when I think about content today, it's multifaceted, right? Because we really are focused on video content, but it's got to be under 5 minutes. If you look at kind of, and this,
it's got to be snippets, to catch their attention.
But at the end of the day, we're going to do, 101 education as well. So I think we spend a lot of time producing longer, more informative content for the advisor community. And then we spend, shorter, more punchy time with end client content. So you're addressing two different client bases there between the intermediary and the end client. And I think that's a journey for all of us. But what excites me as a private markets GP is that the entire industry is embracing this, and we're all getting after it together, which is kind of exciting.
One of the things that I've been asking folks today is, we feel like there's part of this sea change is this acceptance of alternatives, this democratization of alts, this flight, another avenue of flight to safety, actually, during a time where there's so much uncertainty. And do you think that's why maybe investors are more receptive toward this? So I know that we're seeing $30 trillion wealth transfer in the next 5 years. I think even greater than that over the next 10. Are we seeing more assets flow into this space?
I think you're seeing more assets because there's greater transparency now today with these evergreen vehicles. And I think at the end of the day, people understand their risk appetite. There are risks to investing in public markets. There are risks to investing in private markets. And with the convergence of those two things now, I think people think about their credit allocation. And they think about that overall. And then two underlying components could be public credit and private credit. So if one is doing opportunistic credit or direct lending in the private space, you have to understand the risk components of that and how it informs your overall portfolio construction. So I think people are being a lot more thoughtful today. So I think in particular on the credit side, in terms of that flight to quality, flight to a safer place, we've seen it definitely with private credit these days.
Oh, interesting. Yeah. So you touched on risk briefly. So as we talk about risk and access expands, so does the need for investor protection. How do you all think about balancing broader participation with the unique risks that private markets also pose?
I think when it comes to risk, you have to be very thoughtful about this. And what I mean by that is we're not in the... when I look at the industry today, there is significant upside in terms of asset gathering for some of these vehicles. I think you have to be very careful about that. And I'm fortunate in that I'm in a place right now where there is exponential growth going on across the industry in terms of flows coming into these evergreen funds. At Carlyle, we're trying to really manage those inflows in a very deliberate way because at the end of the day, our primary focus is on the performance of our funds, the liquidity of our funds, and managing the overall risk of the vehicle. And I think if you take in too much in AUM coming in the door towards you, that can become really complicated really quickly. So how do we manage those levers if you're in my seat? Well,
tell us. How do you?
You don't want to have mass distribution of your vehicles. So what I tell people is I want to do more things with less partners. So I am not looking to broadly distribute all of our funds in every place, in every country, in every geography, because that creates all sorts of complications ultimately for us. So from my seat, we're going to be very deliberate. Let's say if we're launching a new fund. I am going to probably pick 5 global partners that are probably going to be region specific, and I'm going to probably wait 12 to 18 to 24 months to see that. Now, some of my peer group they'll go with 20 to 25 partners. Ultimately, we're going to play the long game. We're going to play that kind of 3 to 5 year time horizon at Carlyle, and we understand that at the end of the day, if we're achieving the performance that we say we're going to give you as an end client, and we do that.
That comes with dedicated focus and attention.
100%. 100%. Yeah.
So tell me about then what some of the top criteria are that you look for with these select partners over this duration.
So first of all, it's got to be with partners that have as much pride in their brand as we have in ours. And I think what I mean by that is these are typically partners that have been in the business a really, really long time. And they are folks that want to be associated with Carlyle. They want their end clients to have access to Carlyle. And we want to have access to those end clients as well. So there has to be a deliberate partnership there. I think adding to that as well has to be the fact that there has to be a commitment to education. And that's a two-way street. So we've got to work with that partner in terms of the education of end clients, in terms of the education of the advisor community. So I want to work with folks that are committed to education. I also think that we need to be committed as well to doing multiple things together, because ultimately, what I want to do is I want to be able to offer our best-in-class closed-end vehicles on that platform. alongside perhaps some co-investments and alongside our evergreen structures. So I'm trying to create an ecosystem that exists in this partnership, and I can do that with a limited number of key partners as a result.
That makes a lot of sense. So what do you think are some of the misconceptions about the private markets industry today?
Yeah, I think we need to, as an industry, perhaps be more open and talk a lot more. I think and what I mean by that is I think we've historically been somewhat shut off from the broader investment community, and kind of I think we need to do a better job of getting out there and telling our story. And I know that from talking to end clients and talking to advisors, that as soon as you have the opportunity to tell them about the benefits of private markets, they get it. They get it probably faster than perhaps at times some of these articles. When I think about the benefits of secondaries, for example, you talk about the mitigation of the J-curve. The minute you talk to someone about that, they're like, I get it, and how do I access secondaries as a result? And then that's where you really dig in. So it's more of a process, and I put it more on us than anyone else. Us, the GPs in the private market space, we now need to kind of get out there in a very meaningful way, and I think we're doing that these days.
Right, and you're seeing that with all the activity happening at Carlyle and across the industry.
100%, yeah.
Yeah. So Carlyle recently partnered with UBS. I think we spoke about that briefly before. Can you share how the company's global footprint shapes the firm's perspective on opportunities in the private market space today?
Yeah, so when we talk about great partners, one of the key attributes is a firm that has a global footprint, right? Because we have a global footprint. So, we're particularly excited right now about efforts in the Japanese market. I've been in this bit, you can see by my gray hair, I'm sure these lights are bringing up all my gray hair. I'm 26, 27 years in this business. I thought
you were going to say you're 26, 27 years old.
It's a while ago.
Yeah.
So when I think about this business, I've been talking about Japan forever. And I've been telling you, Japan's coming, it's coming.
Right.
In the last 2 years, it has actually arrived from a wealth perspective. So the great news, for example, in that market is Carlyle's been in that space since 2000. So we're 25 plus years in the business there. So that's one example where I think about the main money.
Basically, being a first mover globally in certain key markets gives the firm a very key competitive advantage.
And I talk about being glocal, right? You got to be global but local.
I love that, glocal.
So, glocal.
Okay.
So feel free to steal it.
All right.
I'm not sure where, I might have borrowed it myself from someone at some point, but glocal is the way to go. And so we've got to have boots on the ground with the relationships, again, that understand the underlying kind of dynamics of that market. That's something that's really compelling. And from my seat, if you think about the major money centers that are out there, it's Tokyo, it's Hong Kong, Singapore, Abu Dhabi, and Dubai, and then you get to kind of your Zurich, your Geneva, your London on the and then Toronto.
Okay.
So these are all, if you're in my seat, these are all the places that you're thinking about. And
as top of mind.
Yeah, correct.
So it sounds like geographic diversification is key to generating alpha.
All day long. Yeah, and our investment teams then are on the ground in all of these locations as well. So we've got a bit of a unique position there. Especially relative to a lot of our peers here in the U.S. who, right or wrong, have a very U.S.-centric view.
Right.
We have that, but we also have the global perspective.
The global perspective. So when leading in a fast-changing environment like the private markets, how do you balance the long-term vision and agility needed to adapt quickly? You could look up and there could be a new executive order any day of the week, or just geopolitical developments that impact all of our portfolios.
Look, it's hard is the honest answer, right? Yeah. So I think that you have to be realistic. You have to set short, medium, and long-term goals. For example, I think the worst kept secret was that executive order that was going to come out around the retirement space over the summer that came out specific to the 401k defined contribution world. Everyone in the private markets arena has been getting ready for that. We'll see what the DOL letter says in February. That will come out, and that will kind of set the guardrails and kind of, I think, will give us a better understanding of that space. So when I look at all of these things, I think you have to really think about what do you want to achieve in the current year, and then what is the 3 and the 5 year target. When I think about wealth today, I would say wealth 1.0 was what I'm going to broadly define as banking. And what I mean there is RIAs, IBDs, wire, all that good stuff. And I think for the most part, most firms today are pretty good at that. And I think understand, or at least we understand how to work in that channel. 2.0 is going to be retirement, and then 3.0 will be insurance. So I think what you're going to see
What's your timeline prediction on that?
Well, I think retirement is a 26 event
for
the US. The UK market actually is one that's actually there already. And then I think insurance comes up maybe over the next 2 to 3 years. I think there's probably some product innovation needed as well. We're spending a lot of time on CIT wrappers, for example, for the retirement space. And we'll see what we ultimately do there. But it's exciting, and it's going to be a really interesting time for everyone in the industry.
So what I find so interesting about your background is you've led in both traditional institutional settings and now at the forefront of wealth and democratization. How has your leadership style evolved as the industry itself keeps changing?
Yeah. There's the home front, and then there's it's I'm at the bottom of the pecking order at home, first of all, so I have no leadership at home, which is fantastic because that allows me to decompress, which I love, right? Which is just with 3 teenage boys and an awesome wife. I'm incredibly fortunate on the private side that I kind of have that foundation. So I think when you think about leadership, I think it is key to, one, understanding the firm you're at and what's the DNA of that firm. I think what's great about Carlyle is we still have the 3 founders involved. David, Bill, and Dan are just fantastic folks and mentors that I have available to me. And then I think about folks in the C-suite, whether it be Harvey,
So Lindsay, I have to ask. I have to interrupt and ask them, what are some of the key leadership qualities or traits that you've learned from them? I mean, David is pretty much one of the funniest people. I think he could go head to head with Dave Chappelle. But some of the other leadership traits.
I think David would tell you, don't take yourself too serious, right? And and he's 100% right. And I think he would also, Bill would tell you, don't be afraid to fail. You're going to fail, but but he'll take that one step further and be like, okay, let's dig into why did that fail? And let's understand it probably at the core, there was something there that actually was right.
That had
it was
merit.
Execution. That probably. So I think with all of these folks, and I look at Harvey and the team, and when I look at Harvey, what he does is he kind of looks at from the ground up how a business works. He wants to understand everything. And he's just this sponge. And it's incredibly impressive when you get to work with folks like that. So I think over the years, I've been fortunate to work with great folks, and I try to take key attributes from them and then make it my own. I think ultimately the seat I'm in is about scaling the business. The only way you can scale it is if you empower the people, your colleagues that you work with. So I have to have great teams that work with me because ultimately they need to make decisions independent of me. I could be a bottleneck otherwise. So if you're not empowering people, you're not leading these days.
Right. So we're just about out of time, but I have to ask about something I'm personally very passionate about, which is F1. You guys made a really big announcement and a big investment in the Red Bull team. So talk to us about how that kind of came together and why that presented itself as this must execute opportunity for Carlyle at this moment.
Yeah, I think, this is all about Carlyle trying to redefine itself in the market as well. And I think it talks to our need or our desire to want to be present and kind of from a global perspective. So I'm fortunate that I got to work with some really great folks in our corporate communications and marketing teams to think about where should we go. We looked at golf, we looked at tennis, we looked at a lot of different things. Ultimately, we landed on F1 because F1 is global. And as we've said throughout this interview,
is key
it's
Carlyle.
Key for us. Yeah. And I think, too, it's growing exponentially today. And then ultimately, we needed to find a partner in that space that really understood us and culturally we could kind of connect. And Oracle Red Bull Racing was that. And Laurent and the team there are just fantastic. It helps that they're the number one team.
That they're a winning team.
They're a winning team,
Yeah.
so that doesn't hurt us.
Right.
It's exciting. It really, I think it's going to be fascinating to watch the next 3 years, that partnership and how it evolves and how we can kind of learn from each other. I think there's a lot that we can do together. Super excited about it.
So you mentioned you were looking at some other sports potential opportunities. Could we see more Carlyle sports investments in the coming years?
Hopefully when you interview Harvey next, you can ask him about my budget and increasing that for me.
Right.
I think that I think we got to digest this partnership first, and I think you will see us continue to be creative. I always use the word that we like to be a little scrappy, and I think it's fun to be scrappy in this business. So we're going to be thoughtful, we're going to be scrappy. And I think we'll do interesting things down the road. Stay tuned is what I would say there.
Okay, stay tuned. Well, Shane Clifford, Carlyle, Global Head of Wealth Management, thank you so much for joining us.
It's fantastic. Appreciate the time.